Welcome to the Finance News Network. I'm Jessica Amir. Today, I'm at the offices of Ausbil Investment Management with Portfolio Manager and Co-Head of Equities, John Grace. John, welcome back and thanks for having us.
Thanks, Jessica. Nice to be back.
So first up, you're the manager of the Ausbil Australian Emerging Leaders Fund. Who is the fund most suitable for?
It's suitable for investors seeking exposure to the growth and income of Australian companies that have significant upside in the evolution of their businesses. It's a concentrated portfolio of 30 to 40 stocks covering the industrial, financial and resources sectors of the Australian market. The fund was established in 2004 and since then it's delivered a compound annual return of 11.8%, outperforming its benchmark return of 9.6%.
Thanks, John. And businesses are changing more than they ever have before. What industries are really undergoing the most change and what offers the most opportunity for investors?
Yeah, it's a good question. We believe both the healthcare and the technology sector in this market offer really interesting opportunities as the businesses evolve and offer global competitive advantages. The companies we really quite like include Seek, Afterpay and Altium in particular. These companies have evolved in the domestic market, caught their competitors off guard and really starting to expand their business models into a global market and offer significant opportunities for investors.
Thanks, John. Now to the fund. How did your largest exposures perform during reporting season?
We had some really good results out of companies exposed to the Chinese consumer thematic. Those stocks include the A2 Milk Company and Blackmores, and they outperformed given strong results. In addition, we've got some holdings in the infrastructure spending thematic. We saw good results out of CIMIC, Downer and Seven Group in particular. In addition, those stocks in the healthcare space that have got good global exposures as well also had good results such as Cochlear and ResMed.
And what changes have you made to the portfolio?
Yeah, we've trimmed our resources overweight a little bit. The sector has been a little bit disappointing over the last 3 to 4 months, impacted by weak emerging markets, a stronger US dollar and falling commodity prices. However, we really believe that there's some exciting opportunities in that resource space as the underlying fundamentals remain robust and balance sheets are very strong. In addition, we've added to our positions in the commercial services and supplies sector, and those companies are really benefiting from strong infrastructure spend and the big mining companies in particular spending more on expanding their operations in WA. Those companies include Seven Group, CIMIC Group and Downer, and their strong positions in our portfolio. The fund remains committed to a global growth scenario and therefore we're underweight defensives such as financials and REITs, and we believe that those sectors will suffer a little bit relative to the potential in the global growth scenario.
And how are valuations at this stage of the cycle and what impact will higher rates and tighter liquidity have?
At this stage of the cycle, valuations are reasonable. In that sense, they're not expensive nor cheap. On average, the market valuation is around 15 times earnings, which is par for the course, and we've got underlying earnings growth of about 8.5%, which is not too bad given domestic economic conditions. In the mid and small cap space, earnings growth are higher than that, around 9.5% and 25% for some of the smaller cap stocks. We're paying a slightly higher multiple for that growth, but prospects look very strong there. In terms of higher interest rates, we believe that that will affect valuations in the financials and therefore remain underweight the financial sector.
And lastly, John, what's your outlook for the second half?
Ausbil believes that global growth will continue. In light of that, the fund is exceptionally well positioned for that scenario. Our overweight in the resource sector should benefit from a recovery in commodity prices, which are currently at very low levels given some macro headwinds. In addition, the fund has got some really good high quality exposures to some strong growth sectors, and we do believe that those positions will reward us over the next 12 months.
John Grace, thank you so much for your insights.
Thanks, Jessica.